Here comes the boom. Oh, here comes the boom. Hedge funds don't really want it now. Alright, I'm clearly not much of a singer, but it does got a little jingle to it. You guys can't even lie. Now, what we have to talk about here in this video is the end of the day data. Everything you need to know. We just did get an Ortex short squeeze trigger that was triggered. I guess I'm sleeping under a rock because this happened December 18th. And it looks like we're in for a continued rally. We're looking at a technical breakout. We're looking at the short interest that has really not changed. The Stocko tracker data, which looks incredibly bullish, and a ton of potential buying power that is going to happen throughout the month of December as well as the month of January. We're also going to touch on what Biden is expected to say by the end of close today and how this could essentially play into another big leg up for the markets tomorrow and on Thursday and continuing through the rest of December and ultimately January. To state the obvious, AMC is having a strong day today, currently up 2.3%, and it's been volatile but not very volatile because we have had a wide range today. We were up as high as 7%. Now we're only down 2.3%, and most of the day we were sitting in between about 4.5% positive and 5.5% positive. So we're on the lower end range, and anything can happen here in the last half an hour or so, give or take, of trading by the time this video does come out. But essentially everything in this video is still remaining the same, and we're looking at this technical breakout as this yellow line, or this CCC line is what it's called, is above the blue signal line. Last time this happened was back here November 22nd. That was the last time we were bullish on the MACD, and even throughout this baseline effect that we had down here, hit a low of $25 per share, bounced all the way up to $34 per share. We never actually went bullish on the MACD. We never even went close to going bullish on the MACD. So right now is a clear sign for trading algorithms to start actually buying the stock and to start bidding it up again. So that is huge right there, and I am very pleased with what I am seeing. The fact that we are up today just in general is a good thing. We are seeing a divergence away from the large cap stocks to the mid cap stocks. Less so towards the end of the day today, but definitely in the beginning of trading today, the Russell 2000 was up over 2%, whereas the NASDAQ and the S&P and the Dow were only up about 1%. They have came up, NASDAQ up about 2%, Dow Jones up 1.54%, and the S&P up 1.63%, and now ultimately the Russell 2000 approaching 3%. So they have came back a little bit, but overall, Russell 2000 and the mid-cap stocks are doing much better than the large cap stocks. Now we know we have Biden speaking. Like I said, he is expected to announce basically no announcement, not announce, but a country lockdown. He's not expected to do this. He's basically expected to say, hey, this is not on the table. We're not going to do this. And that's been a big fear of investors as of late, that he could potentially come out and say that, hey, we might have to lock down the country. And if he says they won't by any means lock down the country like he's expected, like I said, then I think that's going to be a great thing for markets in general. And I think that's going to fuel this rally throughout the next couple of days and next couple of weeks. We also have the Santa Claus rally that is on our doorstep, the January effect as well. And if you guys don't know what that is, go ahead, watch my last video that I just put out at 2 o'clock. And we also do have the wash sale rule, which is essentially going to give us that timeline from the end of December through January to see these stocks be bought back up, including AMC, as the wash sale rule would have expired by then. So all of that key information and looking very good heading into the future. As far as the Ortex data, we're going to get into the short squeeze signal after we go over the data, because I guess I must have been sleeping under a rock. I never seen this. Nobody really even reported this, but we are looking at estimates of 20.32% short interest of free float, 104.31 million shares that are sold short. Return shares for the day, 1.74 million. Borrowed shares of 2.04 million. So relatively speaking, it's been a pretty flat day as far as the Ortex estimates are concerned. Not too much covering, not too much shorting, kind of evening each other out. And the share utilization is 81.34%. The days to cover, 2.46 days to cover. We are seeing exactly what I want to see. The days to cover ticking back up as the price of the stock is going up as well. Ultimately, you're going to see a big divergence where the days to cover shoot down and the stock price shoots up to that $50 to $60 range. And I'm looking forward to that, obviously, as a lot of you guys are as well. That's not going to cause the shorts to cover, but it's definitely better than being down at these lower levels. Now, let's go over the short squeeze indication that we are actually getting right now. So we got one today and one on December 18th. So I was wrong. We have a short squeeze type 3 rating that did come out today as well. Recommended days holding was 2. The mean return was 23.6%. And the squeeze type 2, the one I was talking about, December 18th, the mean return not available, recommended days to hold 10 days. So this is a very strong signal that we just got today, squeeze type 3, and that's exactly what happened back here before this June rally as well. So very, very interesting. Looking like Ortex is signifying another short squeeze kind of event is coming here in the near term future with a 23.6% return. That's pretty dang good over 2 days. So you're looking at Wednesday and Thursday potentially giving us even more returns. So pretty cool right there. I wouldn't hold your hat on it. I wouldn't base any trades based off of it, but it's definitely a strong sign right there. And there's only 2.22 triggers per year. So it's relatively rare to see the short squeeze type 3 rating get triggered. Now, as far as the Stock Tracker data, guys, we are looking at 180,000 calls that are out of the money this week, 38,000 calls that are in the money. And then for the put side, not too much potential buying power that's going to come in from that, so I don't even really want to talk about that too much. But we do have, like I said, 180,000 calls that are still out of the money, 3.8 million potential shares that have to be hedged if AMC stays at this price, but 18 million potential shares that could run into the money, and a lot of the open interest is just out of the money. So that will be interesting to see. If we do get another big move up, you're definitely going to see market makers have to go out and buy some shares on the open market to hedge for the calls that are running into the money. Same thing for January 21st, 2022. 127,000 for calls that are in the money, 412,000 for calls that are out of the money. This is an incredibly high number here on both sides, and we do have a lot of that open interest even being held at, let's say, the $40 strike, 55,000 for open interest, and that's 5.5 million shares that potentially have to be bought. And you do have periodic options like the $35 strike, 10,400 for open interest, and then like every 5 like even strikes, so the 40, 45, 50, 55, 60, all of these are going to have high levels of open interest, and that's exactly what we see. That $40 strike alone will give us a big boost to the upside. But now, like I said, as far as the technical analysis, we can see that the MACD, like I said, is bullish. So that's a strong sign right there, as well as we did get rejected off the 200-day moving average right up here at $32.45 per share, and that is ultimately going to be our major resistance level. If we can break out above that, that is a very, very strong sign. As long as we stay above $28 per share, we do have room to come down, but as long as we stay above $28 per share, that is looking incredibly good as well. I wouldn't even care if we fell down to $26.50 as well, because that's still putting us in this bullish trajectory. But the higher we stay up, the more that we really push that 200-day moving average, the better it looks, the more bullish sentiment you actually see in the stock. My price prediction still remains the same. We're going to end this week, in my opinion, in between this 200-day moving average, $32.45 and $35 per share. And then after $35 resistance, the 50-day and the 100-day resistance, watch for that $45 level. Once we break out past that, which could happen very, very fast, especially if the short squeeze type 3 trigger is actually triggered, then you could be looking at $50, $60, $70, $80 per share. Relatively easy in my personal opinion, given the data that we are going over here in this video. Another thing that I really want to set the record straight on: low volume and a high move to the upside, or a big move to the upside, is good. Why is that good? Because that's showing you people are holding on to their shares. If you are seeing this kind of move in between a 2 to 7% move today, with only 40 million for volume today, then imagine what's going to happen when you start to see 100, 200, 300, 400 million shares that trade hands. You're going to see huge moves, 20, 30, 40, 50% moves possibly in any given day due to the fact that people are holding on to their shares. And once traders come in and want to buy those shares, they're going to have to pay a lot more to start triggering those sell orders that some people have out there. So that's basically going to conclude this video. Not too much else to actually go over, but all of this information is looking incredibly bullish. So love and appreciate you guys. Thank you for watching this video. I will see you in the next one.